these are the 4 accounts that you need in your investment journey, whether you're in your 20s, your 30s, your 40s, your 50s, your 60s. Hopefully you are starting young in your 20s or your 30s, but I've talked with friends and a lot of my friends do not understand these different accounts that they actually need right now in their life, in their investments. And so in today's video, I'm going to talk about especially these 4 main ones that you absolutely need if you want to grow your investments over time. Now, I do have the privilege of coming from an accounting background. That's what I studied in college, and maybe because I went to college for that, I just naturally know this, but there's so many of my peers just don't have these basic accounts and how to find these basic accounts for their investments. Also, I have to say that I had a lot of influence just by listening to podcasts, watching YouTube videos, reading different books. And so all of those things inspired me to make this video and to let me know exactly what accounts that I need. And so hopefully this video brings a different perspective. Comment down below which accounts do you have? What other accounts would you add to this list that are necessary? I'm trying to focus more on the necessary part. Yes, you can get these other investment accounts, but I think these are critical to your investment journey. All right, now before we go on, be sure to subscribe to this channel as I talk more about personal finance, the housing market, and the economy as a whole. Now I'm going to drill into the computer and show you all the different accounts that you need. So the first thing that you need is a checking account with no stupid fees. There are these major banks, Wells Fargo, Chase, I'm calling them out, Bank of America. They have absolutely ridiculous fees, from minimum balance requirements, from just monthly fees amounts because you don't have a certain amount in your bank account, and different aspects or high overdraft fees and things of that nature. So here, this is what we're concentrating on. All I did was do a simple Google search for the best no-fee checking account, and you can do that too. And so one of the main things that they follow is that no monthly maintenance fee, no minimum balance requirement, low initial deposit, right? Available nationwide, maybe has a physical branch location or online accessibility, large ATM network, because this is your checking account. Sometimes you need cash, and then FDIC insured. So I'm going to show you all other accounts. I'm just going to go through this article. And my number one tip is that if you never heard of this bank, do not use it. Even though they're a fine bank, they're FDIC insured and everything, I would not recommend you go with a bank that you never heard of. And there's some big brand banks on these lists, so you will definitely find banks or investment accounts that you recognize. All right, so number one, you see the best overall Capital One 360 account. You already saw it probably. They have Ally, Discover, Alliant, Credit Union, and then Chase College checking account. Chase is actually on the list. If you're in that college age, maybe they have requirements about whether you're in college or not, but Capital One 360 is probably the best one. I've heard it before, but they have no maintenance fee, no minimum balance. They have over 70,000 ATMs in their network. Overdraft fee is $0. No minimum deposits to open, and they actually have an APY. What checking account do you know actually pays you an interest on your money? Not many. Having Bank of America, you will never see an APY on a checking account. And then ATM fee reimbursement, none. And then they have mobile checking deposits. But there is a con, no reimbursements for out of network ATM fees. So if you go outside of the 70,000 ATMs that they have, they charge fees. And so they won't reimburse you for that. That's the only con that they could find about Capital One 360. So it's important to find a checking account that has no fees. So that's the very first thing that you need in your investment journey on how you handle money in your personal finance. And Capital One 360 is a great one. They have Ally. You probably heard of Ally because of their savings. Well, they have a pretty awesome checking account too. Very similar to Capital One, but they do have an ATM fee reimbursement up to $10 per statement cycle. So that's decent. And then they do have an APY 0.1 for $15,000 or less, which most people are probably in, and then 0.25 for over 15,000 minimum balance. Some of their cons: online only bank, right? No brick and mortar location, and then 15,000 minimum daily balance required for a 0.25 APY. It's a checking account. You don't expect so much interest from it. And then they have another one, Discover, very similar to the other ones. They have 1% cash back, a lot of ATMs and things of that nature. What else do they have? They have a credit union on here that you probably online, and then they have Chase. They actually have a big bank on here. Here's the kicker. So $6 monthly fee, no monthly fee service fee for up to 5 years if you're a student between the ages of 17 and 25. 24. So if you're a college age student and you're looking at this video and watching this video, this may be a good option because Chase still has a ton of brick and mortar location if you need that. Honestly, it would probably be a good choice for a lot of people. I'm thinking after that 24 age, you will have to start paying that $6 fee. And if you really want Chase and brick and mortar locations like Chase, then you should look into this if possible. Now, I don't know if you have to sign up during those ages or if you can sign up later and just pay that $6 monthly fee because, you know, $5,000 to waive monthly service fee. So if you do deposit more than $5,000, you won't pay this $6 monthly fee. Overdraft fee. If you're overdrawn by $50 or less at the end of the business day, or if you overdraw by more than $50, you bring your account balance to overdraw by $50. Does not require enrollment. So it seems like, or less at the end of the next business day, bring your account. Honestly, I'm a little confused what this is saying here. It seems like it's not saying there's a fee if you're able to replenish it pretty quickly. So Chase is probably a good option for a lot of college age students. And I think with its presence, a brick and mortar location, it can be a good thing for a lot of people. Now, the next account that I want to talk about are high yield savings account. And so just looking at this list, you're seeing where high yield savings accounts, how much they're paying: 4.65%, 4.4, 4.75, 4.5, 5.17. You know, my tip that I gave for my checking account, I would say only work with a bank that you're familiar with. Now, these banks are probably fine, but I never heard of CFG Community Bank. What? And so if you truly want to go with this 5.17, go ahead. But I've heard of PNC Bank is 4.65%. That's pretty good. Heard of SoFi. I heard of BMO. I heard of Lending Club, and these interest rates are pretty fine. That's your next account that you need. That's account number 2 is a high yield savings account. The reason why I love a high yield savings account is that you can set it and forget it, right? And a lot of these high yield savings account are only offered online, which can actually be a good thing, right? It doesn't tempt you into going into your savings account. And so with the high yield savings account, you could do automatic withdrawals from your checking account. Let's say you have Capital One 360 and you're putting it into PNC. You can do that. Now your PNC bank is just right here and you're logged into your checking account, but you don't see your PNC. And over time, it was just built. And let's say once every couple of months, you check your high yield savings account and it has so much money. And that's the advantage to having a separate savings account from a separate business, right? So you don't have to see both numbers at the same time where it tempts you to start spending money. Another thing that I want to show you all are like these great banks that we've all heard of. So Capital One has a high yield savings account. They're paying out 4.3%. And so you can have a Capital One 360 and a high yield savings account, even though I recommend having different companies. So you can just have it separate, but if you want them combined, you can go the Capital One high yield savings account route. Another one is American Express, well-known brand, 4%. And then the next one is Discover Bank that we all heard of, and they're paying out 4.15%. So that's the second account that I would recommend, a high yield savings account. So the third account that I recommend everybody to have is a 401k. Now you can only get a 401k if you work for someone, right? If you work for a corporation, a business, or someone. And the great thing about a 401k is that they do company match. A lot of companies match as high as 5%, some a little bit higher. And so what that match means is if you put 5% of your gross income, let's say you make $5,000 a month and you put 5% into your 401k, that's $250. Your company will actually match you and give you $250 for free to put into your investment account. And so now you're investing essentially 10% of your gross income, but only spending 5% of it. That's a huge benefit, right? And 401ks, they're tax deferred, meaning that you don't pay taxes until you actually withdraw after retirement. You know, now you can withdraw before retirement, but there's some penalties. And if you actually need it for certain things, like maybe a down payment or emergencies, you could probably withdraw, pay taxes, but not pay the penalty. That's some other things dealing with 401k. But the main thing is if you work for a company, take advantage of your 401k because number one, they match and they give you free money. So take advantage of it. Now, the fourth account that I want to end off the video with is a Roth IRA. And so here you're looking at the best Roth IRAs, just a simple Google search, and you see them. You have Schwab, you have Wealthfront, you have Betterment, you have Fidelity, you have Vanguard, you have Merrill Edge, and you have Schwab, right? Two different divisions of Schwab. And so a Roth IRA is important because they grow tax-free because because you're putting after-tax money into a Roth IRA. And so when you reach the age of retirement, you can withdraw the money tax-free. So you don't pay taxes on the capital gain. And so if you buy Apple stock for $100 and then you're 60 years old and Apple stock is worth $1,000, you can withdraw $1,000 and not pay taxes off of that. That's the incredible benefit of a Roth IRA. The other benefit with the Roth IRA is that you have more control over your investments. So within a Roth IRA, you can invest in specific Vanguard funds, ETFs, different index fund, or if you really like Apple stock, you can put a good portion of your money into Apple stock. Now with Roth IRA, there are income limits, all right? If you make a certain amount, you cannot open a Roth IRA. All right, so the income limits is if you're single and you make less than $153,000, you can invest and contribute to your Roth IRA. And if you're married, it's less than $228,000 combined. And so the contribution is $6,500 or $7,500 if you're 50 and plus. So if you're younger than 50 years old, you can put a maximum of $6,500 every single tax year in your Roth IRA. If you're over 50, they allow you to put a little bit more because you're a little bit late in investment stage of life. But yeah, that's Roth IRA. So those are the 4 accounts that I would recommend. All right, just to go over. So number 1, a no fee checking account. There are some good ones that I showed. Capital One 360 is a great one. Number 2 is a high yield savings account. There's different ones that you can use. Marcus by Goldman Sachs, Discover, PNC banks with high interest rates. The third account that I would recommend is investing into your 401k. Your company usually matches, and so they give you free money. Take advantage of that free money. And then number 4 is a Roth IRA. Roth IRA allows you to put in after-tax money that grows tax-free and gives you more control over the different investments that you want to invest in. All right, you all, hope you all enjoyed this video. Be sure to comment down below and I'll talk to you all later.